Hey, this is Brian with your Q3 2024 update. And remember, at Leelyn Smith, we try to reach client goals with the least amount of risk possible. Okay, this quarterly update tackles a question that is on a lot of investors' minds, and rightfully so. AI has become far more sophisticated in recent years, and it's created opportunities, it's created disruption, and it's also expected to change the way we conduct business. Hence, everyone's talking about AI and the potential investment opportunities there. There are investment opportunities there. There are also risks, which should not be overlooked. So in this video, we will cover what is AI, the opportunities to invest in AI, and the risks of investing in AI. So AI, what is it? It's just an acronym for artificial intelligence, which is essentially technology that allows computers and robots to conduct tasks that typically required human intelligence. This concept has been around for decades. The term was coined in the 1950s. We are just in what's called a generative AI phase due to some other technological advancements such as data processing speeds and data housing. So ChatGPT, you may have heard of this, is considered the most recent breakthrough of AI, generative AI specifically. And there had been a few versions of ChatGPT, but the November 2022 release is considered the start of this phase of AI. So we're about 1.5 years in to this AI investing revolution, so it's very young. So where are the opportunities? Well, the opportunities for AI are almost endless because it's easy to see the wide-ranging applications that this could have. And it's easy to see that almost every company listed on the stock exchanges could benefit from this. And we think, and here's why, we think there are two main phases of this. The first one, phase one, will be about creating back office efficiencies. That will increase profit margins, but those back office efficiencies, you're essentially applying better efficiency or a better system to something that already exists, essentially. Phase two is where it's more interesting. That's where you see product and service advancements. By the way, in phase one, the companies that you already know, they're household names that will benefit from this. So it's going to be pretty familiar. Phase two, though, you will probably see companies that you haven't heard before. And we're already starting to see some of these companies pop up in our databases and potentially be winning stocks, but it's a little bit early for some of those. Now, what about the risks of investing? It's not as if AI doesn't come with risks, right? So the first risk is chasing returns, and this is a known problem in investing. It's essentially speculating. This is essentially buying a stock just because it's going up or buying the market just because it's going up. That's not an investment strategy, okay? So what we want to do is warn investors against buying into the hype, if you will. Now that doesn't mean ignore what's happening, but be a little careful there. The second one, and this is becoming a big deal, is regulation risk. So we think in 2025, because we have a change of presidency in the United States, we're going to see a good amount of AI regulation start to pop up. So we'll see what that looks like, but we expect a considerable change there. Third, this is more of a advisor or portfolio manager risk consideration. It's called style risk. And that just means the classification of the types of stocks you own. AI stocks tend to be all growth stocks, and growth stocks tend to be a little bit more volatile than other stocks. There's nothing wrong with growth stocks per se, but it's a little bit more prudent in a portfolio to have some growth stocks, some value stocks, some blended stocks, and also some larger and smaller stocks. So we need to consider the classification of style that we have in our portfolios. So, should we invest in AI? Look, it's easy to get caught up in the hype and fall prey to poor investor behavior. But remember that poor investor behavior is not only selling when markets are down and at the bottom, it's also overpaying in fear of missing out. So if we can identify AI stocks that have strong competitive advantages, and we can form realistic expectations about those stocks, we will and have already invested in those companies if they have a good value proposition. And times like this are when having a strategy and sticking to it are paramount. We are not going to abandon our strategy, even if that means we miss one or two of the winners along the way. Okay, that's it for this time. Keep a lookout for our next quarterly video. And remember, at Leelyn Smith, we try to reach client goals with the least amount of risk possible. Thanks for watching.